Okay, cool. So we have 20 people on the dot. That's cool. So it seems like I guess I'll explain like the whole thing. Now that we're basically closed up, there's like a couple of people that are on payment plans, but nothing crazy. The reason why I took everybody out was I kind of just wanted to have a roll call. I wanted to see how many people were active. Like even after the 21 days, if you don't um, let me know that you're active, if you just give me a reason why it took you so long, then I'll probably let you back in. Like it's not anything like I don't want to kick people out. I just want to see how many people were like active at the time. And it seems we have right around like 200 people. So I don't know if that's like a bad thing or a good thing. I just think of it as like, oh, we have 200 people, and I can see how far we could potentially take the group and see like what direction to take with 200 people. You know what I mean? Um, so right, also another goal with making or taking everybody out and then making sure that they're active is like now I think that could kind of trigger something to where you guys will be more active on calls on top of them only being like every 2 weeks now. I would expect more people to be on, and if more people are on, more discussion is made, more things that we can cover, more things that we can talk about. I don't expect much on this call, but that's kind of like the expectations that I want to make over the next 2 to 3 months. Because like I said, now we're looking at pretty much a 12, 24, 36 month journey of seeing where you guys want to go, not necessarily as traders, but just like in your life. And you guys have like a group of people who are very like-minded and have a very distinct background, because we have people from here in the US to people in Brazil to people in Portugal to people in Spain to people in England. So I think like that's pretty much the vision that I want with the group. I want you guys to take some type of value out of this. The only thing that I guess is charged now is like the one-on-ones, but other than that, like everything else is free. I don't really plan on making any more stuff unless you guys like want to do like merch or stuff like that. But that would obviously be only for you guys, not for like anybody else. Um, but yeah, it's pretty much the direction we want to take. I want to see more activity. I want to see you guys like how do I say this, like pretty much show more engagement in the calls. That way these calls are much more valuable and we can actually get some good discussions going, because like for the past couple of months we wouldn't get more than like 10-15 people on Zoom, and then now look, first one of 2023 we have 20 people on Zoom. But yeah, I guess we could go ahead and get started, and we can talk about that after I am done covering everything for today, because what we're going to do today is pretty much start 100% fresh, um, especially with how ugly it's been over the past couple of weeks, especially last month. So we're just going to start completely fresh. Oh, actually, let me turn this on. Cool. So the cool thing, first things off, is obviously monthly closures and trying to see if there's anything that we can read, just sort of based on right our yearly closures. One thing that I can note just off the top of my mind is a potential reference point, but I'm actually going to make that like super light. The reason why I'm pointing that out obviously is that one, we are technically bearish from an overall macro, and I'm just going solely based on structure. You can see break of structure, and we can see a confirmed reaction here, and it's not confirmed based on this time frame, but it'll be confirmed based on the internal moves, and we'll come back to that. But as of right now, it looks like right we are technically bearish. It looks like we are technically bearish here. We start going into the quarter closures. One, we have an engulfing, and if you guys have paid attention in the past couple of months, engulfings are a pretty good sign of reactions for the most part. And something I'm gonna do here. It looks like this might be another POI here. Maybe it's on the C. Yep, you can see that. And the reason why I like pointed that out right there is, one, you could see that there is an attempt to go higher here and engulfing, and then an attempt to continue, which then failed. So there's something here. So as you can see, based on the 6 month, right, there is a POI there, and you can even see that, right, because of the breaks of structure, that is a confirmed reaction based on a 12-month bias. So with that, in my opinion, we could be looking at a very bearish couple of years. Does that mean that this is going to collapse this year? No, I'm just saying that our overall direction is technically towards the downside, and especially now with taking out previous liquidity right here, that's a solidified point internally that was taken, reaction is confirmed, and we could be looking at a very, very big move into the downside, because right, if you start to zoom into our weekly, right, we already know that there have been solidified points that we have taken out, right? And the only issue right now that I can just honestly just point out is the fact that we are still internally bullish, but we know that we have to be internally bullish, right, within this to be considered a pullback, within this, within all of this, right? That has to be bullish in order for it to be considered a pullback of the overall macro trend. So thanks to that, wrong time frame, back to the daily, right? Thanks to that, it makes me not necessarily 100% confident that this is going to just completely collapse from here. Obviously, in an ideal scenario, we would want, right, any type of deeper POI, and that deeper POI could technically be counter trend from a swing standpoint just because of our internal structure. But right, if we're looking at this from a bigger scale, there is also the possibility that we're looking at, you know, a potential failed flag pattern here, where we see a range and a failed flag, right? But that's a bit optimistic at best right now. It's something I could see happening, but I just don't have the data right now necessary to make that type of assumption. So the only thing that's really pointing out to me now is, right, once we start to zoom out, one, that we have our first significant break of structure. You can see solidified high, solidified high, solidified high, solidified high, solidified high, break, continuation BOS. This should be the pretty much the anticipation of a correction to the upside. However, we have not converted, right, fully into the bullish side. That's why it's considered a continuation BOS. However, after the continuation BOS, not only was the immediate structure taken, but it looks like, right, our overall internal structure, or pretty much our bullish invalidation is going to be met, and that could justify, all right, let me actually delete this. Excuse me. That could easily justify, right, that our range has been solidified. So now where's our previous range? It just depends on what you want to consider, right? Your previous solidified high, and then from here, high, low, high, low, high, low, right? Unsubstantial new high, new low, I'm sorry, and then that leads to the continuation BOS. So that would be considered, right, an internal structural range. However, I'm not too confident, right, in these types of scenarios, because when we zoom out, they're actually very corrective. So this is just me trying to make sure that I'm not glued to the bearish, to the pullback bias, which would be a pullback based on a swing time frame. So as of right now, right, if we are to meet the invalidation from a major intraday and then the swing, we could see, right, the immediate continuation, right, and that would justify why we have a failed reaction there. So that's pretty much all I'm assuming. There is a potential failed reaction, and that would mean a continuation to the downside, meaning EU up, AU up, etc., etc. So now is when we can get to those. So this one, pretty weird monthly closure. I mean, yearly closure, I'm sorry, there isn't really much I can point out here in my opinion. Nothing much I can point out from a 12-month, 6-month. I mean, you can see that there's wicks of interest. You can see that there's a liquidity grab that could be fulfilled within the next couple of months or years in this case, right? However, the bias technically is still down. So as we start to zoom in, right, the only real thing that is like kind of sticking out to me is one, a potential internal liquidity grab, but I just don't see that solidified point yet. That would be here, right? However, although we have a potential liquidity grab here, that does not necessarily justify that we're 100% bullish. But in my opinion, as of right now, I would more so bet on a bullish bias than a bearish bias, just because of how strong this entire move was and how fast it was to correct itself after we took liquidity. So in my opinion, this entire general area is considered one big general point of interest, right? How this area could be where you look for justified scenarios as to why we can start to come back up to 1.08. Because in my opinion, if we are to create these solidified lows internally from a major intraday swing, then it's very possible to see a transition into the upside. Because as we can see now, just based on the current narrative, what we are seeing right is an efficiency fill, a candle fill, and as we begin to zoom in from there, it looks like we already had an attempt to go lower, and by that I mean this confirmed reaction based on the continuation BOS. After the continuation BOS has been met here, now that we have the failed reaction, this would be in support, right, of that bullish bias, in my opinion. Right, we have reaction, confirmed reaction, right, and now we have another failed conversion here. This is where we pretty much change our bias completely. The reason why this is so significant, right, this general area of interest, is because technically, because the reaction is valid, this is technically still a potential move. So because that is still a potential move, then we can justify, right, whatever general point of interest we see here. Right, so now that we have this, we have the exact same thing just happening on a smaller scale, right? The continuation based on the POI, confirmed reaction, justified scenarios internally here. However, because this is now broken through, then we're now seeing, yes, disruption, potential disruption. But more so what I want to point out here is not necessarily the disruption, it's the failed attempt to go lower. This attempt to come lower has essentially failed, and we're now seeing, right, the conversion in the opposite direction. So in my opinion, this is probably pretty bullish right now, which would be in alignment with DXY, right? Failed conversion 1, failed continuation based on that 2, but it's only failed until this occurs. That's what invalidates everything. And these types of scenarios are where pretty much create your high probability scenarios, because one, your invalidation, your bias is there, but your order flow invalidation is in the POI. So this is technically a highly justified scenario. But yeah, as of right now, I do see this pretty much continuing to come up higher. EU, this one has been super messy, and this is pretty much the same, just inverse of DXY. Excuse me, first thing I want to note, right, we've taken liquidity here, continuation BOS, and it seems like we have a pretty strong reaction into the upside and engulfing, which is obviously the inverse of DXY. We're seeing that. And as we start to zoom in more, then we can obviously see that the pullback has begun, from a swing standpoint, right? High into low. And the reason why I'm pointing that out is because it looks like this is a continuation BOS, meaning that that is a solidified high. So you can see that there. However, I'm not confident at all with any type of bearish continuation here. The reason why is because you guys always know that I like to point out that we know we can almost for a fact, if a bias fits our execution, we can at least aim to the first immediate intraday target. We know that because after the liquidity has been taken, we cannot necessarily judge or predict 100% of the time what is going to happen after the liquidity has been taken. So this is the exact same scenario, except we're looking at this from a very, very high, very, very high scale. We've taken out a very major yearly low for one, pretty much snatched it, and we're now seeing reactions above that previous low, and it's justifiable by, I mean, you could even argue, right, a liquidity grab there, but that's really just an internal transition because you can see, let me actually delete this stuff. You can actually see, once again, order flow disruption based on, right, you can see that there's internal structure here, confirmed reaction. You can see that there's continuation POI, order flow disruption, invalidation, and the invalidation was never met. And that's what's giving that move into the upside. However, it looks like we could be seeing another potential failed reaction here where we see the continuation BOS. And then if we see this, then we can anticipate the continuation to the upside. And the reason why, like I said, I'm not too confident in that bearish bias is one, these monthlies have been pretty strong for one. Two is what we said, everything about the yearly bias. Three would be DXY. So I'm more so just leaning towards that upside there, at least for the next month or so. But that obviously could change by the time our next Zoom comes around. So I'm still bullish on that one. Gold, very bullish on this one. In my opinion, this is probably I'm most bullish on this than I am with any other bias on any other pair. And that's simply because of, I believe it was a weekly. Excuse me, yeah, weekly. Right, this weekly POI we pointed out back in the day. This was like September. But we pointed this out back in September. And although we didn't see the cleanest of conversions, the bias did withhold itself. And now that this has a confirmed reaction from, you know, even technically a macro stance, then we're looking at, you know, obviously aiming for, right, these relative equal lows, equal highs, I'm sorry. So as as this begins to continue, it doesn't look like we're going to get any kind of dip now, in my opinion. I don't know if you guys remember back when we were like here, I think I said something about how it doesn't make sense to anticipate the very deep retracement, especially with structure being there. And I mean, that's kind of more of like an accumulation thing. That's the only reason why I say that. Although this is not a schematic, I do tend to see a lot once the transition has occurred. Then realistically, you don't always get that very deep retracement. And that's the only reason why I said that at the time. But yeah, as of right now, I am more so leaning towards the continuation of the upside, and I don't see this stopping anytime soon. I would love to see some sort of, you know, low high retracement, and by that I mean we could see something stall out, high low, and if we're technically going off of solidified points, you could definitely go something like this. And then these are the scenarios that you want to get into because this is a bearish to bullish transition, and that would pretty much be ideal if we're aiming for X target. But as of right now, it looks like this one just wants to keep going higher. Last one, US 30. Let's see. I think this one, if I do recall, very weird. Very weird yearly closure, 6-month closure, looking pretty bullish if I'm being honest. Looking a little bullish. 3-month engulfing, a little bullish as well. You can see inefficiency there. Inefficiency here, same thing. Inefficiency there, 2 week. This hit? No, it did not reach. Anyways, right. So I believe, if I recall correctly, we were anticipating. Let me change the color. Anticipating two things. We knew that this was in play, and this is pretty much what invalidated, right, the short or the bearish bias that we had at the time around here, which is around late October, early November. I do remember that we were technically kind of bearish around here, because of the failed reaction, high into low, and then the structural disruption potential. But we did have the failed reactions that we covered there. But I know that as of right now, we were anticipating, right, a reaction based on this POI. That was the weekly wick, I believe, and that was because they had taken out a previous structural high, making that, you know, follow the SC principles. So as of right now, I do remember that we had a relative point of interest. I just don't remember exactly what time frame we were on. I believe it was something around here, something around there. And that's pretty much where we left off for the week. So now the only thing that I don't like is, if we're gonna be, you know, super detailed about this, right? Pullback has started, right? Pullback has begun, right? We did not create the new low, but we had a sustained reaction there based on, let's say, 50% inefficiency. That confirmed reaction turned into no man's land, right? So now all of this is kind of just messy. All of this here is messy, right? This then shows an attempt to go higher, but then unwillingness again. So still no man's land. And even up until, you know, only this recent move, everything's been kind of no man's land, because we're just taking liquidity, or we're missing new lows or new highs, and not really getting anywhere, right? In this entire section here, which you can just say it's the month of December, but it actually started at, yeah, it started like at the end of December. So as of right now, I don't necessarily agree with this fully playing out. The reason why is because of this weekly closure. Weekly closure looks really bullish. So in my opinion, if we are to see something, or to see a conversion, I think the conversion is still yet to come. I think this could still maybe come up higher, and then we see something here to then justify that. But as of right now, this is not enough for me to justify the continuation to the downside, especially with how bullish we are on the other time frames. So this one, I wouldn't be surprised if we just, you know, flew from here. But yeah, if you had to give me, if I had to give you like a bias, I don't have a long-term bias, but definitely short-term, medium-term. Short-term definitely looks a little bit more bullish, and medium-term does still look a little bit bullish. So I think that would cover for today. US 30 looks short-term up, gold up, EU up potentially, AU up for sure, and DXY potentially down just because of the immediate move that we had. Excuse me. So yeah, let's see. We have 22 people on here. What do you guys want to cover? Are there any suggestions, any comments on what I said at the beginning of the call? Is there like I'll talk about video stuff like when I'm actually like going to make them, but that's still like a bit away. I have a couple of things I need to get to before that. But yeah, now this is you guys' time. And I have all day, by the way, so. Let's see. 15-minute LG. I believe you're talking about this. I'm not gonna go through other pairs. If you want to show me what you want to go through, by all means, show me what you got, and we can go from there. But I'm not gonna go through other pairs. And don't send me direct messages, bro, because the Zoom can still see it, like the recording. Just so you know. Gold broke your heart. Let's see. Where's this LG you're talking about? Okay. Hold on, I'll come back to that comment. You're referencing here. It's still just so messy because there's internal reactions. So I don't even want to consider that a full-on LG. Well, you could consider it a full-on LG, but it's not something I would be able to make a trade with. Oh, okay, I see. So you're saying this here. Even this still, like, I'm sure with different brokers, this could be relative equal lows. But I think that this is a much bigger confirmation. It's just the big momentum. I think that's a bigger confirmation than this in this situation, because that high momentum, then you can see that it balances itself out, and that's a scenario to the upside where you can at least anticipate, right, the intraday highs. But yeah, I do see what you're saying though. Well, waiting for the information of the higher time frame of the expected intraday. Yeah, that's kind of what I'm like figuring out this year. Is it worth, like, obviously you could do it with math, but trying to test it real time, is it worth the investment of trading less for higher time frames while scaling out than it is to trade more but with intraday, but you're securing more of your profit? I don't know where that balance is, and I just think that if I find the balance between it, then I can, you know, decide whether to trade only minor intraday or only major intraday instead of like swing and scalp. Does that make sense? Because if you can anticipate a minor major intraday move with scalp conversions on a swing bias, then you would trade more in that scenario than if you were to just take minor intraday conversions on a swing bias. But obviously the security would be better with the swing in comparison to the intraday, but it also just depends on your model at that point. So it's like I'm trying to see which balance is best. But if I like had to how do I say this? If I had to make a choice, in my opinion, if you can have a swing bias and you could take minor major intraday trades in between them, then I think that your hit rate could be much higher than if you were to try to scalp your way through the minor intraday biases, if that makes sense. When what do you mean? What do you mean? Can you hedge them? I hope that answers your question, Damien. If not, I can explain further. But yeah, definitely, like, this year is just going to be 100% figuring out how the hit rate and how the return is when you're comparing minor major intradays scenarios based on swing in comparison to scalp entries based on minor intraday biases. Because let's just be real, this trying to take a scalp scenario solely based on a swing bias will lead to a bad hit rate because it's hit or miss. And that's because you don't understand, or not necessarily you don't understand, but you just don't know where you are in that major intraday, minor intraday cycle, if you're in the trend, in the pullback, etc. Yep, because that's where I've noticed it become, or this entire process just become a bit more um what's the word? A bit more progressive. I think it's everything has become much more progressive when people start to lean back from the scalp, focus on the minor intraday, sacrifice RR for the short term, but to gain your confidence with actually winning trades. Because at the end of the day, you have to be able to win a trade, right? And I don't care what anybody says about how RR will eventually, you know, overtake your losses. Well, what if it doesn't? What if you don't win the trade? It just depends too on what you're looking for, bro. If you're looking for hedging, are you wanting to make plays against your own bias? And if you are, why? Are you just trying to protect your profit, or are you trying to increase your risk? Like, what is the reasoning behind what you're doing, or behind why you're doing what you're doing? Sorry. Yep, it does. It does because trading $10,000 is nowhere near the same as trading $100,000 because losing 1% on a $10,000 account ain't shit. Well, let's not say it's not shit, but it's not as much of a big deal as losing 1% on a 100K account. So it really just falls down to what your goals are. Like in my opinion, if I had to pick two goals as a trader this year, it would be to win as many trades as possible, and two, minimize my risk as much as possible. Those would probably be like my two like go-tos this year. Anything else would be extra. High R would be extra. High account size would be extra. Anything like that would be extra. It would just be, I need to be able to win as many trades as possible, and I need to be able to minimize my losses as much as possible. And that is considered with losses themselves, and with loss of opportunity, and with obviously your entire risk profile, and making sure you don't lose what you're most what you're not losing what you're wanting to lose, if that makes sense. Like if my risk profile is 5%, after 5% I'm done for the week, month, etc. You just want to make sure you don't hit that. But yeah. Hey, Silvan, I'm still waiting for you to show me GJ. And the reason, I'm pretty sure you're new, but the reason why I do that, I don't like looking at other pairs that people ask me to look at, because one, I don't want you to use that as a justification as to why you should be believing the bias you're believing in, if that makes sense. I agree, Swing Scott. Yep, definitely. Yeah, that's cool. You could send me some journals. No, you're good. You're good. I agree. Swing scalp is kind of hit or miss, and definitely affects overall profitability, and you can see the full potential of the trade. And you know, for people that don't actually trade the style, you know what they would tell you? They would probably tell you, well, why are you not correlating your swing to your intraday to your scalp? Which is, that's kind of like the solution per se, but it's not easy. It's not easier. It's easier said than it's done. I'm sorry. It's way easier said than it's done. And I think that, let's say if your swing and your scalp match, but your intraday doesn't, does that completely invalidate the scalp? You know what I mean? Like, these are the questions you have to ask. Or if my intraday and my scalp are in correlation, then I can more than likely assure that I'm gonna hit TP1, because that means that I got the conversion, and that means that I got the internal bias correct, right? And that's kind of what I mean with the whole liquidity thing, and that's why I think it's better to just focus on two that are pretty much together, and by that I mean swing and intraday, or intraday and scalp. I hope that makes sense. But all I want to do is, the reason why I want to do those pairings is just so I can increase the security on the potential of my trade, if that makes sense. So hopefully I didn't like confuse you guys on that one. Hopefully I didn't confuse you guys because nobody's saying anything. So yeah, so figure out. So I guess I'll just probably just leave that topic at focusing on two things: is winning as many trades as possible, and making sure your risk profile does not get met, or your the most you're willing to lose does not get met. And in my opinion, I think those are two very controllable things. Obviously, you can't control whether or not you win a trade every single time, but you can focus on the probability. Yeah, does anybody have anything else you guys want to bring up? Excuse me. You guys coming to London? I think we are. Oh, I need to send some messages about that. Yeah, I think we're going the last week of February, something like that. But we'll probably do like a small meetup. I'm not gonna do like no like in-house class or whatever. No, that's just dumb. I don't want to do that. I just want to meet you guys, see what's up, and then probably get some dinner after. Who knows? Probably is always better with correlating intraday and swing as opposed to scalp and swing. Yes. But now, is the probability always better with correlating intraday and swing as scalp and intraday? I think that's a better question. Portugal would probably be like the next one, because in Europe, I only really want to go. Like, there's only a couple of places that I want to go. I definitely want to go to Switzerland. In Europe, I definitely want to go to Spain, France, England, Portugal, Italy. Those are pretty much like the main spots in Europe. Yeah, Italy for sure. Let's see. Cause we're only gonna do England and and France this time around. But we definitely have to go to Portugal, because Portugal is like where like our biggest base in RCV is like Portuguese. For those of you that don't know, we have like 40 people in Portugal. Ronaldo Museum, yeah, maybe the Brazilian Ronaldo. Yeah, man, for sure. Is Is living expensive over there? I would hope not. I mean, I wouldn't expect it to be. No. Hey, let's see. Do we have any admins in here? Let's see. Let me see. All right. Well, whenever we go to London, I want to go to what's that place called? I want to go to Luton. I want to go see where the top G is from. It's gonna be weird. I'm gonna be like the only Mexican there. Really? Yeah, I heard Luton's the worst of the worst. Nice. Cool, but does anybody else have anything they want to cover? Don't want to get too distracted. Anything you guys want to show? So I guess now, since you guys know how the layout is gonna be, I'm gonna set like I'll make like an announcement saying like when the zooms will be, and I will expect you guys to like bring more stuff into the call. By that I mean like more markups and stuff. And of course, I'm still doing the journals and stuff every weekend. Yeah, man, I heard the views are very nice. Assignments, bro, assignments. I've been doing journal reviews every week for like a year now, a year and a half. I mean, brother, read the instructions. Read the instructions, and you'll see what I mean. I think I've shown examples in there too. I'm pretty sure. I'll try to remember. No, you're good, man. You're good. Nice. Yeah, man, it's been a long time since I've done a Saturday Zoom. I don't know. We'll see. I mean, I guess I'll make a poll. Like, would you guys rather have me do Zooms on Saturdays instead of Fridays? I think it's a little bit more better because my weekdays can be a little hectic. Yeah, maybe you guys, maybe that's why a lot of more people hopped on today too, because it's on a Saturday. Cool. I'll make a little poll for that for sure. Yeah, but does anybody have any more questions before we go ahead and wrap up the first Zoom of the year? I already said I have no idea, bro. Just being honest with you, I have no idea. No idea. So don't even like ask me about it right now. I said I have a couple of things I need to get to before I could even start that. So I mean, don't expect that to be like anytime soon. Anytime really soon. Cool. So any more questions? Yeah, man, you guys have a great weekend. Definitely hit me up if you guys need anything. I do tend to open all of my DMs like as soon as I get them. But for sure, if you're doing journals and stuff like that, please keep it to Friday, Saturday, just because that helps me stay a lot more organized. But other DMs like that, like I'll probably answer them within 24 hours. I'm pretty good at checking my DMs. Cool, but